Good afternoon. My name is Jessica Persinski, and I am here at Ritter Insurance Marketing as an ancillary product specialist. We are super excited to welcome all of our carrier partners for this virtual panel. We'll do a quick intro for all of them so that you can get familiar with who everybody is and what carrier they're with, and then we'll get started. There will be an opportunity at this for Q&A, so when that part comes up, you can raise your hand, and then you'll have the ability to speak to any or all of the carriers and get your questions answered. So with that, I will go ahead and kick things off, and we can introduce Natalie with Cigna.
Well, hello, everyone. Thanks for joining. We're super happy to have you. Cigna's just entered this exciting short-term care market. So I am actually with Cigna Supplemental Benefits, and I am so happy to be here and share information.
Awesome. Thank you so much, Natalie. And then with that, we can do Dimitri with GTL.
Hey, good afternoon, everybody. I'm Dimitri Simos. I'm an AVP here at GTL. Been here for like 20 years now, or over 20 years. And we've been doing short-term care for at least I think about 10, 12 years that I could think about. More on the short-term and the nursing home front, but also in the last 6 years or so, we've been doing just strictly home healthcare products. So it's a really cool market. I think, what we're hopefully going to you'll be able to gain out of this conversation today is that how important it is to have the conversation with your clients. And, and I know, as from a GTL perspective, we've always thought that short-term care is just as important as talking about your life insurance and, your med subs and everything else that you're doing with your clients. So it's something that I think is very valuable for for you and for your insured. So we're looking forward to having this conversation.
Perfect. Thank you, Dimitri. And then next we have Brandon from Heartland.
Wonderful. Thank you, Jess. Hi, everybody. I'm Brandon Reed with Heartland National. I've had the pleasure of working with Heartland National for a little over 7 years now. Since I started with the company, we've specialized in senior market products like Medicare Supplement, hospital indemnity, home health care, cancer insurance, and now just recently breaking into the annuity space. We entered the short-term home health care market last August of 2023, and it's been a blast seeing that product grow and helping agents start uncovering the opportunity to help their clients with this need.
Awesome. Perfect. And then with that, we can do, it's going to be Tom for Manhattan Life.
Hi there. My name's Tom Randall. I'm actually from GoldenCare, and I'm representing Manhattan Life today, and I'm proud to do so. And I will let you know, GoldenCare, I've been the national marketing director here for quite a while. I've been with GoldenCare for 28 years. And one of the things I noticed looking at all the different carriers and products is that the nice thing about GoldenCare is we represent all the different products on here. And there's so many great selections in the extended care market. So we're really excited to go out and teach agents. We've been kind of spearheading, if you will, the Integrity Extended Care Initiative. And Dennis and I have done a lot of training with a lot of the different partners, and we're excited today to help you out and hopefully give you the insights to see just how important this market is for you and your clients.
Perfect. Thank you. And then Dennis, would you mind speaking for True Freedom?
Sure, absolutely. Thanks, Jessica. Dennis Reiner with GoldenCare, also Director of Strategic Accounts. We work with all of our fellow partners like Ritter and other non-partners. And as Tom said, we have been very active in this space. We cut our teeth for many, many years in the long-term care space and saw the importance of moving into this marketplace. We like to call it the extended care marketplace. And so today I'll jump in on maybe some comments on Manhattan Life, as well as mainly True Freedom, and we'll talk a little bit about that solution and where that fits into the ancillary space.
Perfect. Awesome. So with that, I think we can go ahead and get things started with the questions themselves. We'll just do a quick agenda. So basically, for the questions, we're going to do some general info for short-term care. And then we'll do sales and marketing, and then some more product-specific questions. So for that first question, we have, what are the key benefits of short-term care insurance, and how do they differ from traditional long-term care insurance? And we can go ahead and kick things off with GTL and Dimitri.
Boy, that's a kind of a big question right there, because that's quite honestly, there's such a big difference between traditional long-term care and short-term care that you really can't compare the two. So I always tell everybody, if you can get somebody on traditional long-term care, do that first. That's going to be your best option for sure. But for those folks that can't afford it or can't qualify for short-term care, for traditional long-term care, that's where the short-term care option comes into play, is that it's a simplified issue type program. It's going to have a smaller benefit period, maybe not as rich as a traditional long-term care type plan. So those are some of the kind of a highlight perspective. What's the real big differences? Obviously simplified issue, you're talking what, 6, 7 questions maybe versus a book that you have to fill out in traditional long-term care. So, it's definitely something that's for mid-America, and most everybody can qualify to be able to try to get some kind of protection, which is what the ultimate goal is going to be with short-term care.
Perfect. And then Dennis, did you have anything you wanted to kind of add to that?
Well, I think some of the differences are in the short-term care space. We're seeing that these products are built on indemnity, as Dimitri indicated. They're easier to obtain, and as such, you're dealing with more of a finite risk in comparison to long-term care, and as such, one of the advantages and one of the advantages of products even like True Freedom is that these are unisex rates, just as they are in the short-term care space. And also, what you have is the differences between in traditional long-term care. Normally it's reimbursement. Hybrids can be reimbursement, or they could be indemnity. But I think that's some of the major aspects. A lot of the products also, don't have as much inflation options in terms of on the short-term care side, or even the standalone home health care that would not have any, inflation add-on rider, and neither does the True Freedom product as well. And I think that there's other advantages that maybe we'll speak to that separate the two as we go through this call today.
Perfect. Thanks so much, Dennis. And then Natalie, did you have anything you wanted to speak on there?
I'll just add that, I certainly have been passionate about this product throughout my career. I started kind of in individual health and then transitioned into the true long-term care. And what I saw so many times in the marketplace is people either couldn't afford or couldn't qualify for that true long-term care plan, right? So I think, Dimitri and Dennis really covered all of the really important parts as far as what the basic differences in the product functions are. But I think the opportunity with the short-term care is to offer a product that people can, number one, as we mentioned before, can qualify for underwriting in a more simplified manner. That way we can issue more of those policies. And then for sure, number two, because it is a little bit of a reduced benefit and not as rich as a traditional long-term care plan, something is better than nothing. And so people are able to afford some of that smaller benefit that at least gets them through that first year of transition until they can really figure out what they want to do and where they want to go from there. So overall, I think I agree with Dimitri 100%. If you can qualify for a full-fledged long-term care plan, that is the best option. But if not, this is absolutely a good option for us.
That's a really good point. So with that, I will move on to our next question. Similar vein. So what are some of the typical eligibility criteria for short-term or home healthcare insurances? And with that, we can go ahead and start with Brandon from Heartland.
Sure, everybody. As Dimitri mentioned, this is going to be a much easier policy to qualify for than traditional long-term care, with much easier underwriting, or much more lenient underwriting. I think most companies ask anywhere from 3 to 4 health questions, maybe less, to qualify for a product like this. To sum it up, rather than going through each health question, I think what the companies are looking for is to make sure that this individual is not somebody who will, be on claim day one when they start that policy, making sure they can perform all their own ADLs and don't need assistance or supervision with that, making sure they don't already have a cognitive and function like cognitive impairment like Alzheimer's or dementia, and making sure that they're not already receiving home health care or in a nursing home or assisted living facility in general. Of course, we have a couple other carriers that might have some additional questions or less underwriting than us, but I'll turn it over to anybody else to add to that.
Perfect. Yeah. Tom, did you have anything you wanted to add?
Yeah, you bet. I'll tell you, that's one of the biggest things that we want agents to understand is like Brandon said, is that with our home health care only plans, I mean, it's so easy. It's, are you getting care right now? Are you in a facility? Maybe a cognitive impairment thrown in there for some of the carriers. But that's the beauty of these type of plans. And it's the number one reason we want to turn heads from agents who are out in the long-term care trenches, or if they're selling other plans and they assume that these extended care plans are like long-term care. So for you agents on this call, that's the beauty of this. A lot of long-term care agents, they felt like they had to go to med school. They had 45-page underwriting guides and everything. With these products, it's very, very, very simple. So that's the number one paradigm shift we're trying to change over, is to say, find out the health. Tell your people right to their face and say, it's so important to get this coverage, but you buy this more with your health than you do with your checkbook. So if you don't mind, I'm going to ask you a couple health questions first. And then you can lead to see if they might qualify for long-term care. Then it might be a great option, but you don't want to go get the cart before the horse. So you want to find out how simple it is. So like I said, the home health care is a no-brainer. And then when you get to the short-term care plans, we teach our agents for Manhattan Life, for example, take out your application and walk through the questions with them. It's very conversational. It's very easy. And you can find out black and white whether they qualify in almost every circumstance in just a few minutes. And it's very, very easy compared to the long-term care. So that to me is the biggest difference. And we want agents to embrace the simplicity of it, if you will, because it is not difficult.
Perfect. Thanks so much, Tom. And then Dennis, did you have anything that you wanted to add to that one?
I think that the sweet spot, as we've seen both with the standalone home health care and also with the short-term care, is appealing to that Medicare agent, that final expense agent, that those agents who are really working in the senior marketplace, where their client may have already been priced out of or underwritten out of that particular solution. And so, as Tom indicated and Brandon stated as well, it's important on that pre-qualifying, and that you don't lead too soon. The challenge that most agents have that are in the senior marketplace is that, perhaps they've looked at long-term care and they wrote it way back in the day, but then they moved away from it when it got more difficult from an underwriting standpoint. And also where, as Dimitri said, that book that they had to actually memorize, that 55-page application, really kind of did them in. And so I think the important thing is that agents need to know, who are on this call, if you're not already in the long-term care space, if you are, then it's an easy pivot. If you are not, and you're actually selling other ancillaries, that these are great complementary solutions, and they really are quite easy to actually discussed with clients. As Dimitri said, having the conversation is really the first step in that whole process. But I think it's knowing who your audience is and knowing who the buyer profile is as it relates to what would be most suitable for that particular prospect. Perfect.
Thanks so much. And for our next question, we have, how does short-term care insurance typically work? And what are the coverage periods and limits? So we can kick things off with Manhattan Life and Tom.
Sure. Thanks. It's one of the biggest things we talk about when we get into these short-term care plans, is that probably the worst thing about them is their name, short-term care, because a lot of people get this misinformation or misconception that these are just real short-term care policies. That if you asked every adult in America and said, what does a short-term care policy cover? A lot of them would say, oh, probably 15 or 30 days when you get out of a hospital. They don't really understand that one of the biggest things we teach as we embrace agents is we tell them that these plans can be incredibly robust. They're very flexible, so you can scale them down to be super affordable for anybody at any level. But we also, our most popular plan we sell for Manhattan, again, is our full-blown plan without inflation. Sometimes you'd add inflation to it and double the benefits I'm going to talk about. But literally, you can have a plan that you can go out and have $252,000 for one claim, and then after restoration of benefit, which is so important with these plans, you can have that be doubled up to $504,000. So with inflation on that, you can have $1 million plan potentially after the restoration. So there are some really powerful parts of these plans that people don't understand, that we can gear them up. But most importantly, and I got to spend a second here if you don't mind, is that the beauty of these plans, you can have your cake and eat it too, because these policies, unlike long-term care, and you guys know, some of you on this call know GoldenCare Health Mutual of Omaha designed the #1 selling long-term care plan out there. So we love long-term care, but there are some shortnesses to it and weaknesses to long-term care in general, right? At claim time, you need to have a 90-day certification that you're going to need care for at least 90 days. With these plans, these are indemnity benefits that pay right out of the gate. And a lot of times we're really pushing our agents, look close at selling not only first day home care, but first day facility care as well. And that's a really big difference, because the premiums warrant the fact that you can have this first day coverage across the board very affordably. And you know what? If you look at long-term care plans out there, 97.3% of the long-term care plans sold, this is based on Milliman last year, have at least an 84-day elimination for the facility side. And nowadays, only 8.7% of them have first-day coverage at home. These plans, again, just you bear with me 30 more seconds without Dimitri muting me. The beauty of these plans is you can have your cake and eat it too, because most people that you talk to when you're out in front of a client, whatever age they might be, they still have denial about being in a nursing home and wheeling around in a wheelchair, right? They don't see themselves doing that. They'll fight you to death on that. But these type of home care and extended care plans that we're talking about, they have indemnity benefits that pay for things like knee replacements, osteo, cardiac arrest, bypass surgery, these things that almost anybody can see happening at some point in their life. That's where we use that stat of saying, hey, 70% of adults, once they hit 65, are going to need some type of extended care. And I've got a policy that can pay first day for you right out of the gates and be able to get some great premium back for some of these shorter terms too. And then with restoration, it'll build right back up for your full-blown claim if you need it. Sorry about going long there, but I thought it was important to get it out.
Hey, Tom, I got a question for you. Sorry to jump in here, Jess, but you're the long-term care guru, because I've known you guys for years, doing long-term care. So am I hearing you saying that it could make a lot of sense for somebody to maybe stack a short-term care policy in with a 90-day benefit period, or even a year benefit period, that they have a traditional long-term care?
100%. Good job, Dimitri. I'll send you some money later, because that's one of the biggest things that we do tell people. And if you have somebody with a long-term care plan out there that maybe they didn't have inflation, they now can't afford to bump that plan up, it's not only great just to complement the 90-day elimination that they might have in their plans with a smaller policy, but you can also add a full-blown, you can really stack these plans nicely together on both the home care and the short-term care and in the long-term care market. So it's a great idea.
Gotcha. And just for fun, roughly, what's the average premium for Manhattan Life's plans? Do you know off the top of your head?
You know what? The average premium is right now, because we have a career shop that's been in the long-term care trenches forever. Our average premium is about $2,000. But with these plans, we see a lot of people who aren't in the long-term care market. A lot of our Medicare agents, et cetera, are selling these plans for an average of about 12, Dennis, 12 to 14, maybe.
Yeah, that's in that ballpark.
About right.
Awesome. And then Dennis, you're the next one. I'd really like to speak on this, if that's all right.
Sure. Yeah, I think that, when you ask that question about how they typically work, I mean, the similarity between long-term care and short-term care is they both begin with the premise of how much coverage does someone want. So you're focused on the dollar amount, and there is some limitations, but as Tom indicated, you can still design these plans and they can be very, very robust. But, the other component of plan design is how long do you want that plan to last? And that's where some of the differences lie within the short-term care versus long-term care, because as Tom said, the name does a disservice because there is the provision with restoration to get more than 1 year out of these particular plans. And we could go into a great conversation on claim studies and everything else about why having some coverage is better than potentially not having any coverage, or trying to stretch someone's budget to get more coverage that may not be as affordable. And then again, how soon do they begin? That gets back to that whole elimination aspect, that component of plan design. And typically long-term care defaults to a 90-day elimination, whereas with the short-term care, we sell mainly between 0 and 20 on a facility and 0 on the home care. In many cases, we're now even pivoting to selling more 0 because of the affordability of these particular plans. And then the last thing in that plan design is how fast do you want your plan to grow? And that's again where long-term care has the edge, with more inflation options typically that are available than the short-term care products. And again, the standalone home health care, you wouldn't have that inflation option. And with products like True Freedom, you wouldn't have that inflation option as well. But I think those are some of the different ways in which the person, if they get their arms around that, they can see the similarities and they can understand, the differences as well.
Would you mind touching on the differences too between True Freedom and maybe a more traditional short-term care policy, and how
Sure.
those kind of work?
Yeah, I mean, True Freedom is think of it more as a membership plan, like a AAA. And what you're really buying, unlike that, back to that how much and how long, you're really buying from a length. You're buying home care hours, and the differences between short-term care that covers both home care, assisted living, and nursing home. True Freedom only covers custodial care, very similar to how the short-term home care products work with GTL or Manhattan Life or with Heartland. And so the differences there are, again, that it's there is not the same 90-day elimination. There's a 90-day wait from the time that one takes out the plan, and that could be a difference if you're selling the longer, 20-day or 90-day elimination with a short-term care, but very much similar to how the home health care products work, with really no elimination as well. So the main difference is that this is only home care, and so there it's more similar to the standalone home health care, but the difference is being that it's actually hours that you're purchasing versus an indemnity-based solution.
Something I really like about True Freedom too is the amount of states that it's in. It having that 50-state footprint where they're carriers.
Yeah. That gives an advantage. We have found that it's really been an important niche for us. We love all the solutions and all the carriers that are on the program today. And what we find is that, we're in the problem-solving business. And if we forget that, when we've got clients in California or New York or Florida, a lot of times when we do our webinars, a lot of agents who jump on get so disappointed because we may be talking about some of these other carrier solutions, and they say, oh, but it's not available in California, or it's not available in New York. And so having the 50-state solution, the other thing that does act as a differential is the fact that these products are not only unisex rates, but they're the same rate of all ages. And that appeals in the marketplace, especially when you work in the senior marketplace, where a lot of seniors feel like they've been disenfranchised, so to speak, in the sense that they're used to products that cost more as they age. And the fact that True Freedom, it's the same rate for all ages, is really kind of one of the things that makes it a little bit unique as well.
Yeah, that's a great point, Dennis. And thanks so much for touching on all that. I appreciate it. Natalie, do you have anything that you wanted to hop on and mention?
A lot of great information, obviously, a lot of experts. You guys have so many years in the business with these products. One thing I'll just mention with our product, since it is combined home healthcare and facility cares, we do have separate buckets of money. So if you have a plan or able to find a plan who has separate buckets of money, then if that client needs that care at home and can exhaust the 360 days, for instance, at home, then after they've exhausted that, they would have that full benefit in a facility. So that kind of double dipping, if you will, into that product is also one other thing that just really enhances the opportunity for these products.
Perfect. And refresh my memory, Natalie, you guys have restoration of benefits on both
Yep.
of those buckets, right?
Yep, we do.
That's
Absolutely.
awesome.
Yeah, yep.
Perfect. All right. Well, let's go
And
to
Jess, I think that's a big point to make sure the agents on the call are aware of. With traditional Medicare or Part C, Medicare Advantage, the folks don't get any coverage for home health aid services, right? Our
Yeah.
experts here. They don't get coverage for help with bathing, toileting, dressing, eating, things like that. So that's where these policies can come in and not only help with the 360 days of coverage for the home health care, the skilled services, but a lot of these plans have coverage and benefits available to pay cash benefits to the insured for having that home health aid. On some plans, they have to be licensed or certified. On other plans, like Dimitri, right, you guys have maybe even a family caregiver benefit that you might speak to.
Yeah, no, that's a great point, Brandon. And I really appreciate that. And I think it kind of segues nicely into our next question, which I'll go ahead and let you kick off. What are common exclusions, limitations for short-term or home health care policies?
Awesome. Yeah, that was a good segue. And so, for example, with Heartland National, you have to have a licensed or certified home health care provider or home health aide provide these benefits. And for us, it's a strictly at-home policy, nothing facility-based. So when they're getting physical therapy or skilled nursing services, those have to be provided at home when you're working with the Heartland National Home Health Care Plan. With other companies, of course, they have options for facility-based care, and I'll let Dimitri expand on that or whoever speaks next. But one of the big things agents have to understand is you take out this policy, you pay your premiums as the insured, and then you have to trigger benefits, either due to a functional impairment that prevents you from performing 2 out of 6 ADLs or a cognitive impairment like Alzheimer's or dementia. So, somebody in very good health, just because they're receiving physical therapy doesn't mean they're going to get paid cash benefits for receiving those benefits in their home. That person is able to go to a therapist to go get those types of treatments in a facility or at a clinic. So just understanding that there are some limitations in order to trigger benefits, but also in who provides those services. And maybe I can let whoever's next speak to that.
Yeah, before I let you go, I wanted to ask Brandon, with regards to your prescription benefits on the home health care plan, is that limited to medication?
Yeah, that's a good question. And we get that question a lot, right? I'm sure everybody does. So those are not limited to those benefit triggers. So day one, you can start receiving those RX reimbursements without looking at pre-existing conditions with us or checking to see if they've already been taking those medications for a period of time.
Perfect. Thanks so much, Brandon. And Dimitri, I haven't heard from you in a while. Do you have anything to add to this one?
Yeah, actually, probably the biggest limitation that we have in insurance in general, quite honestly, is that pre-existing condition limitation. That's the biggest thing you really want to, make sure that we talk about with our clients in general. I don't care what product it is. It could be hospital indemnity, it could be cancer, whatever, any of the ancillary products that we do. Because a lot of folks, believe it or not, I can't believe I still get this question after 20 years of being in the business. Hey, my client just saw a doctor for something. Can I get him on this plan? The whole idea about doing what we do as risk managers, I guess you want to call it that, is make sure we get people on the programs ahead of time before they actually need them, because that's when we can best serve the folks. We talked about this earlier on, about we got to make sure we have the conversations when the situations aren't presented, because we don't know. It's all unpredictable. We don't know when the situation may occur, and that's why you want to have these type of coverages available. So to me, that's probably the biggest limitation of any insurance plan we have is the pre-X side. And that varies depending, but most of the time it's a 6-month pre-X. So as long as somebody can answer the health questions appropriately, and then they can get issued a policy. And then if they were being treated for something within 6 months of the policy being issued, they can't claim for probably the first 6 months is basically how the pre-X works. But from a limitation perspective, probably one of the things that you want to pay attention to was doesn't matter if it's facility care, because we have a facility care with a home health care benefit plan. We have a short-term home health care plan. The thing that both those type of plans, aside from the cognitive or functional triggers that you need, you also need a plan of care. Without a plan of care, these plans don't function, because the doctors need to show you that it was prescribed for them to have X number of days of home service and so forth. So that's another thing that kind of makes sure it's not just a thing that a person can say, you know what, I think I'm going to have a home health care service come and take care of me. It doesn't work that way. You definitely need a plan of care to help out with, to be able to get access to the benefits of the plan. And I don't know if this is probably not the right time to say this, but I'm going to say it anyways. One thing I want to kind of throw out there and get people thinking about. Yeah, we're calling this short-term care insurance, short-term care benefits. The dollar amounts that people are getting for such a simplified issue products are staggering. You can get, let's say for 360 days of benefit, you can get $108,000 if you maxed it out on some plans, maybe higher on other plans. On home health care benefits, you can get up to $162,000 a year of benefits. So don't let this all be discounted that it's just short-term care. It's not a lot of dollars at stake. There's a lot of dollars at stake for your insurance, and I promise you, your folks can't afford to pay the hundreds of $1,000, to get this care done without this type of coverage. So sorry, I needed to go down that rabbit hole.
You're fine, Dimitri. I did have one question. So I know that you mentioned you need to have a plan of care in order to get that claim. So do you also have to have a prognosis of getting better? Not that anyone really wants to think about that, but is that necessary? Or can I get paid out even if I don't have a prognosis that I'm going to get better?
I believe it's just the plan of care. The prognosis is not needed in terms of they're going to get better or not. It's just making sure the doctor's prescribing the services. That's all we need to be able to continue on with paying out a benefit.
Perfect. All right. Thank you.
Sure.
And for our next question, we have how does the cost of short-term care insurance compare to traditional long-term care insurance? And Dennis and Tom, would you guys mind speaking on this guy?
Yeah, I'd love to.
Why don't you take the lead, Tom?
Sure. Yeah, you guys will see I'm going to throw you a major curveball because, like you said, we helped Mutual design that plan. We've been in the long-term care business forever here at GoldenCare. And, it is a great long-term care traditionally is the number one leverage plan out there. And the underwriting is staggeringly different. And that's the reason that this extended care market is so important. But I will tell you today, if you'll grant me your ears for a couple of minutes, there's actually times that even though the underwriting is the number one thing, I mean, if you look at our wheelhouse, for a 65-year-old, 36.9% declines based on Milliman's last study. When you get into the 70-year-old market, it's about half of them are declined. But that's not even the not placed. That's the thing most agents that we train them on are surprised about is the actual placement for a 70-year-old to 74 is like 64.7% aren't placed. So it's literally in the 40s. So that's the number one reason agents bang their head against the wall if they're only selling long-term care, and these plans are so important. But getting to your actual question, we've seen that even people, once you hit 60, 65 years old, there's times that even if you qualify for long-term care insurance, there are times that I look at my clients and say, if it was a loved one, I would look at one of these traditional short-term care plans. I mean, maybe not a home health care only plan on its own, because that's a little bit more limiting than what you can get if you're healthy enough. But I'll tell you what, these short-term care plans are incredibly robust, like we all talked about already. You can sell them some massive plans. But dollar for dollar, if I had a 6-year-old female, for example, and I sold them an Omniflex Manhattan Life Plan with a 90-day facility elimination, just to compare apples to apples, and a first-day coverage home care, with a traditional long-term care plan, I would pay $1,906 for that 6-year-old female. And with the Omniflex plan, I could not only have 144,000 home care, but on top of that, a separate pool of money for 108,000, or excuse me, 144 facility, 108,000 home care. Not to get too convoluted, but for a plan that offers more coverage, it's only $1,100, so about 58% of the premium. So when you look at that, and that's apples to apples at 90-day facility, which I don't recommend for the short-term care, I can turn that plan around and say, hey, if you wanted to offer first day coverage across the board, it's still going to be less premium than what you have for traditional long-term care. And then like Dennis said before, and I'll turn it back over to Dennis, the big key here is if you just looked at those facility benefits, 3-year plan for the long-term care and a 1-year plan for facility only with another 1 year for home care, but just looking at the facility side, would you rather get those benefits in 1 year, the $144,000 benefits in 1 year at $12,000 a month? Or would you rather wait 3 years with traditional long-term care? You get your money sooner with these short-term care plans as well. And remember, all indemnity, not reimbursement. So lots of power here, and times that it might be a better choice to get a short-term care plan. Dennis, go ahead.
I was going to say, Tom, those are excellent points. And one of the differentials is, remember that in traditional long-term care, the carriers today have gender-based pricing. And so what we find with the short-term care, having those unisex rates, and again, the power of having, as Natalie pointed out, both pools of money and the ability to have that restoration really does pack a punch. And people will actually claim faster on certain things like a broken hip or or a fall or a fracture, things that normally would not meet the 90-day certification for traditional long-term care. And some of it is really, when you're comparing that indemnity, giving them their cash up front, it's a way that you can justify why people want to reach into their pocket and actually pay for these plans if they feel that they'll actually use them, because that has been the knock for many, many years, as long as we've been in the long-term care space, is that, they don't want to pay for something that they don't ever think that they're going to use because they don't plan to go to a facility, as an example. But if they can see the value proposition that not only is it more affordable up front, as Tom just illustrated, but actually that they can use this plan because they can see themselves having some type of a hip replacement or something that seems pretty much common, versus the idea that they're going to be confined to a facility and a place that they don't plan to go to in the future. That's why, again, coming back to, I know this wasn't part of the question, Jessica, but coming back to the strength of really, when you look at GTL and you look at Heartland and you look at the plans today that have those standalone short-term home care, they really do fill a great void. And I'd like to point out that, remember, with those solutions, that it doesn't really matter if Medicare even would pay. There's no coordination of benefits, so they both will pay. And that's the great thing about these plans.
Yeah, no, thanks so much for pointing that out.
And if you don't mind, I'm just going to add one more thing in there, talking about the cash. That's one of the things. Cash is so important. We put cash in the long-term care plans out there, and that was why Mutual rose to the top, in my opinion. That cash is so flexible. And with these plans, I mean, you look at GTL's got $3,500 lump sum. You've got Cigna with a 10-day paying, 10 days as you get into your care situation. And with Manhattan, we have that Fast 50 where it pays 50% of the benefit for the full amount of days. If you were going to have a hip fracture and need family members to help you with a long-term care plan, it would pay 25% of your benefit. With Fast 50, it would pay first day coverage for the half the benefit amount. So like in that example, you'd have maybe $27,000 paid out over 6 months, as opposed to $6,000 with a facility plan of a long-term care policy. So lots of positives with these plans. The hardest thing is just getting agents to realize how strong the plans are. So thank you.
Yeah. I did want to ask too, I know that like long-term care plans have a lot of tax benefits for business owners. Does short-term care offer anything like that for business or non-business owners?
Yeah, it's a great question. That's one of the big differences now, and we're working hard behind the scenes, working with some of the carriers on this call and working with some of the other groups out there to see if we can come up with an extended care or short-term care awareness week or a month, because with long-term care, the federal government does have the great tax advantages, and that's true LTC 7702, benefits and tax benefits that are not available yet with these short-term care plans. So these are, can be written off different ways with medical expenses, et cetera. But as far as the long-term care benefits, not quite there yet.
Gotcha. Perfect. Well, thanks so much. We can go to our next section of questions, which is going to be sales and marketing type questions. Our first one is, what are the most effective ways to market short-term care insurance to your potential clients? And I will go ahead and have, well, I'll have Dennis kick it off if that's all right.
Okay, sure. I think that, I made this point a little earlier about leading with the right solution. What we have found with products like True Freedom is normally they've been kind of where you're reacting to a problem. You're reacting to the fact that someone has been turned down for coverage, versus the idea of being proactive. And so pre-screening is, I think, one of the most effective ways to make sure. I would say it this way, that when you're making considerations, everything starts with someone's current health. Tom and several others, Dimitri and Brandon and Natalie, also echo the importance of everything starting and stopping with underwriting. So understanding the ability to pre-screen one's health, what is their current health, not what their health was, as Dimitri said, or the fact that their health has changed and now they want to get coverage. Also, you need to look at the budget aspect, because these plans today, as Tom illustrated, they're so affordable. You can strip them down and give someone the foundation amount of coverage, or you can build them up and give someone the high-end, Cadillac type plan. And at the same time, the other consideration in marketing is you've got to really don't underestimate how the underwriting game has changed with other solutions today. It's not really a carrier problem. It's an industry problem, in the sense that where the carrier appetite has gone away. And so age becomes an important factor when you are considering what strategy is going to work, best as far as an effective way to get in front of your client. But I would say, remember, if we're paralleling this to the Medicare story, if you're talking to a Medicare agent or a final expense agent, then whether it's at the end of that interview or whether it's at on a review, they just have the opportunity to start that conversation. And I find that when you want to introduce something that's new, such as a standalone home health care or a short-term care or the True Freedom, always compare something that's new to something they already own and understand. That's the most effective way to market, because when you come out of left field and you basically try to talk to people in either a vocabulary that's all your own, or with terminology and certain things that basically seems very foreign to them, you're not establishing the kind of rapport with that individual, because they really maybe are confused by some of the terminology that you're using. But when you compare it to something they already own and understand, and what you want to show is how the solution that you're talking about, this extended care solution, whether it's standalone home health care or whether it's short-term care, how it's going to pick up where what they already have leaves off. And so we like to compare it to the difference between their immediate care, what they already own and understand, whether it's if they're under 65 and they understand how their health insurance works, or if they're Medicare age and they're on, as Brandon was illustrating, Medicare Advantage plan, then that's their immediate care. But really, what we're talking about is the other half of their health care that isn't being taken care of. And so that's, again, picking up where their immediate care leaves off with an extended care solution, covering those expenses, as Brandon illustrated, that Medicare isn't going to cover. So I find that the best strategy is to, again, come in, keep it simple, and also make sure that you're not talking to them in a foreign language, so to speak, and keep it very simple and straightforward.
Perfect. And Tom, did you have anything that you wanted to add to that one?
Yeah, real briefly, just the number one thing is the good news for everybody on this call is Americans are turning heads now. They're seeing the baby boomers are out there, whatever side of the aisle you're on politically. We know the government can't keep paying for everything. We know that there's a situation where they may need these type of plans. So that's the good news. And unfortunately, 3 out of 5 personal bankruptcies out there happen because of the unforeseen medical costs out there. So those are the type of stats to get people out of the denial side of it. Coming back to what I said earlier about that 90-day certification at claim time is huge. That's a big difference, because then it's a premium justifier to say to people, you know what, you have to protect yourself. Bankruptcies, it's not hundreds of thousands of dollars people are going bankrupt with. What they're going bankrupt, the average is about $18,000. So most people can realize that, you know what, could you really throw a checkbook out and write a check for 25 grand? Most people can't. And that's the beauty of these plans. Again, whether it's home care or a full short-term care plan with indemnity benefits, you give yourself so many levels of protection on both the short-term, very short claims, and with the more catastrophic claims because of these restoration that these compounding plans have. So there's huge benefits to it, and that's our biggest goal, is to keep it simple and talk to people about the fact that, hey, it may not be you wheeling around in a wheelchair, it might be you falling and breaking your hip and needing a couple months of help. And that's the beauty of these plans, is it'll be there for you for catastrophic, and more importantly, sometimes it'll be there for the shorter claims that'll keep you out of trouble as well.
Gotcha. So just to confirm then, it sounds like there might be some opportunities for even the under 65 market with short-term care. Is that what I'm understanding?
Oh, 100%. It's one of the biggest things we tell people is they don't have to have gray hair yet. They're going to get there. And these plans have the solution for them. And it's, again, very easy to sell, because smaller people at the younger ages, not smaller, but younger ages, very, very, very affordable. And you can get these plans in place and give them some powerhouse plans and then stack coverages later on or at the same time.
Perfect. Well, thanks so much. Our next question is, what are some common objections or concerns that clients may raise about short-term care insurance, and how can agents address them effectively? And we'll go ahead and kick this off with Natalie.
Yeah, what an important question, Jess. I mean, this is such a big thing. So, and we've covered so much information. I mean, we've all talked about different things and different pieces of this, but I think there's probably 2 major objections that hit everybody's mind first and foremost. First of all, I don't want to go into a nursing home, right? And Dennis mentioned, think about what if you had a hip fracture and you needed to go in for some recovery, right? People feel like when you start talking about facility care that you're sending them off to pasture to die. I mean, that's really how they frame it in their minds. And so how do we help them reframe that? It's our job as insurance agents to point out the risk that's going to happen, because people don't understand, right? They don't think about, as an example, my mom, I was caring for her in my home for the last 10 months of her life. And we had gone out and run some errands. We got in a Starbucks. She got out of the car, walked around the back of the car, and she fell. Thank goodness in that situation, she didn't have a major illness or problem, but just like that, something can change. And so I think the 2 biggest things would be that, hey, I don't want to think about it. I don't want to be put out to pasture to die, and then it costs too much. And so that's where these short-term policies really fill that gap, is they're affordable, so people don't have to, really spend $300 or $400 or $500 like days gone by to have these policies, but also because they'll really be there to protect you even in the little times. I mean, I use this example. I know, Jessica, you and Dimitri have heard me talk about this forever, but I just think it's such a valid example. Is if you think about to COVID, when really really COVID pandemic hit us on a national and a worldwide basis, and people were locked in their homes for the first few days, right? People had no idea something like this would happen. None of us did, right? If someone had said to us, a year or 2 years before, hey, there could be a pandemic and you may be isolated to your home for a year, you may not be able to work, and you may get sick and die, we might have wanted to provide some insurance for ourselves so that we had an ability to take care of ourselves during those tough times. And so when we talk about these products, we're talking to a couple of different, or kind of a different group of clients, and how the agents, what you're presenting along with these products, whether you're a financial planner and you're coming in and talking about how these products are going to protect the financial picture of the client, or you're a health insurance agent selling a Medicare and under 65 during these open enrollment periods, and you want to circle back with your client in 6 months and talk about some other options, right? So it's a fine line between, do we partner it with the whole financial picture and how we protect your assets, versus how do we help you cover these gaps that you may find yourself in when something happens just overnight, right? And you didn't expect it. So I really truly think that biggest objection, at least that I experienced early on in my career, is, oh, I'm never going to use this. You're not going to send me to a nursing home. I'm not going to do that, right? My kids will take care of me. And we all know, as was pointed out, we just don't have the financial means. People are busy. They have busy lives. The economy is crazy. We can't afford to take care of our parents. We can't afford to pay $30 an hour for someone to come into our homes and take care of our parents anymore. So that really is the biggest thing. The other thing is, I'll just save for that myself, right? And we all know I'm a spender. I'm not a saver, right? And I'll tell you that if I thought, 20 years ago when I was a little younger and had that opportunity to have a premium of $50 a month versus $100 a month, I would have told you, I'm going to save money for that. I'll have that money available. But 70% of folks, 72%, 50 to 65, could not pay a $20,000 or $25,000 bill. And when you get older than that, it's the same. The cash isn't always available. And do you want to liquidate your assets? So really, while these plans are very nimble because they're a scaled down benefit, they're definitely a more affordable price, we still want to try to position them and help people understand that they have to have these products in place to really help protect their full picture. The other thing is the planning issue, right? If you had that hip situation like Dennis was talking about, that could happen overnight. And if people aren't prepared, if they haven't gone out and they haven't picked out a facility, a nursing home, or they haven't interviewed home healthcare agencies, they have no idea what to do. And so that's going to be a problem. But if they are prepared with these products, they're going to be able to easily make these decisions because they have that financial freedom. So we just really need to help them understand that the objection of not wanting to face this reality is really taking the control out of their hands and putting it in someone else's hands, I think.
Great explanation, Natalie. I think we lost her. I think we lost our moderator for a second here. So.
Yeah. Yeah, that's a good point. Brandon, do you have anything else to add?
Yeah,
Oh,
did you say Brandon? I'm sorry.
Yeah, sorry.
Yeah, absolutely. I think Natalie did a great job, and I can tell you've had experience in the field, right? Working with these types of policies, and I think those are definitely the two big objections. I'm not going to need it, right? Where we can quickly overcome that with some statistics and the odds of needing some sort of assistance down the road in your life. I think even the National Clearinghouse for Long-Term Care has some statistics on their website that talk about no matter what age, 60% of us are going to end up needing help with things like getting dressed or driving to medical appointments or even making meals, right? Preparing meals. So we have to remind people that this is actually pretty common. And I think Dennis or somebody mentioned it earlier about it, it being one of the most utilized insurances out there. They don't think they're going to be the person who needs it, but in a lot of cases, you end up needing assistance with these types of things. So we can overcome that with some statistics, sharing those insights with our customers. But also, Natalie, you mentioned self-insuring these costs, right? And just making sure that our customers, they understand what the actual cost of needing something like this is. What is it going to look like if you are somebody who needs help or at home or in a facility, or maybe even needing long-term care, right? Understanding that, yes, we should start with long-term care because most people's long-term care costs land over $100,000 a year. And oftentimes long-term care for the people who need it lasts over 2 years or 2.5 years. So that could put somebody out of pocket $250,000 if they plan on spending down their assets to afford this type of care. Sometimes it's easier to pay insurance premiums. But now we have some short-term care options, right? More affordable options than long-term care, but understanding the difference in those two coverage types. So we have ways we can work around some of those objections. Another one I've heard before is, I've got family who can help me with these kinds of things, right? My children. Well, do they know that, right? Do your kids know that they're going to have to step away from the family that they're taking care of, the job that they're working to pay their own bills and to take care of their family, right? Just understanding that a lot of times these family members aren't aware that they're the person they're going to depend on later in life. And, unfortunately, I've seen it with some of my own clients in the past, people with dementia and Alzheimer's and their family living in Arizona and South Carolina, across the country in different states. And unfortunately, not everything works out to plan like that. So understanding that there is very affordable insurance now that you can put in place to help with a lot of these costs, so you don't have to depend on the help from family or, you're spending down your assets on this type of care.
I think I'm
Perfect.
I think I'm next on the list here. So
Yeah,
I don't know
you're
if
up.
I don't know if Jess is back yet or not, but I'm going to take it from a different twist. Actually, I'm not going to go about it from a product perspective. I'm going to go about it from what are you as an advisor looking to do with your practice perspective? Are you a Medicare only agent and that's it? Or are you an advisor doing full service? Because if that's the case, we need to make sure that all of our clients understand what it is that you can help them with. Because you got to be able to talk to them about Medicare. You got to be able to talk about, the long-term care. You got to be able to talk about short-term care, talk about life insurance, all these things, because an advisor, it's not about pushing product. At least I don't believe advising is about pushing product. It's about advising. It's educating. And the more I can educate a client during reviews and whatever the various other methods that we use, email blasts and email dripping and just fun little things that you do activity-wise with your clients or educational meetings, I think that's going to solve the problem, not solve the problem, but it'll limit the problem of objections, because now you're going to know what exactly to be able to help your client with, to then be able to present the solution that's going to take care of their problems. I think so many times it's just we talk product, and we forget. Well, let's have a conversation and see what do you really care about here, and and I think if you do that, the rest of it works itself out, and going back to what Brandon was saying here about the kids part, I was just thinking when you were saying that, Brandon, I go, well, maybe you might want to bring the kids in into the meeting and let them see what the value of what the price is of $50 a month versus them having to shell out X amount of dollars, so it's I think it's it could be that could be another potential opportunity there. I got no problem in explaining anything to anybody with their kids in front of me or not in front of me. It doesn't matter to me, because what I would say to the person that's in front of me, I'd say to their kids and so forth. So, I think that's part of all that. So.
Yeah, thanks so much, Dimitri. I really appreciate that approach. I wanted to ask too, like, what kind of plan benefits and this is more open to everyone, but what plan benefits are offered by you guys that kind of address those concerns for the clients, like maybe a return of premium rider or prescription reimbursements, where there's going to be some benefit to the plan, even if they're not utilizing the main benefit?
I guess I'll start. First one to talk, I guess, wins, right?
Yeah.
like we have a couple different products. We have a Recover Cash product, which is a nursing home with a home health care benefit. And then we also have a caregiver benefit with that. It does have a return to premium option associated with it and an inflation benefit and inflation rider. For me, I think what differentiates our products overall is that we do allow for, family caregivers to be able to provide services to the insured. And we do that with adding, if you're having a home health care benefit with any of our two plans, our short-term home health care or our Recover Cash product, all the person would need to do is that's helping the insured, a family member helping the insured, they would go through a screening process real quick just to help them support the caregiver. Because things that we don't talk about, we talk about the insured all the time. Again, talk about product. Well, there's other things than just that. There are people that help the insureds, the folks that are ill. Who's helping them? What happens to those people? They're working. They got their family to take care of. They got all these other things going on. Well, guess what happens? They end up in burnout. They end up not being able to, maybe they don't stay healthy themselves. So there's a benefit there through our caregiver benefit that they can go through an assessment. Then the assessment will help provide some tools to help them cope. And then in addition to that, they can also receive a lump sum amount of, I believe it's $3,500 that's payable. I would always say pay it to the insured and let the insured pay it over to the caregiver, so this way it stays tax-free. But that this way this help with some of the odds and ends of expenses that the client, that the caregiver will, for sure have to dish out, for having, for helping. And, they're not asking for anything. I'm sure of it, but this is a nice little benefit for them to be able to take care of. For me, when it comes to, when you look at products and, value of it all, the flexibility of short-term care on our Recover Cash program is pretty cool. You can either have a real beefy nursing home benefit for all three levels of care, intermediate, custodial, or skilled care, or you can have a real skinny benefit and then have a real beefy home health care benefit. Or you can do mediums on both ends of it. So you can really, on the Recover Cash side, you can kind of really dial it up to what you really want to do. Now, if your client says, hey, all I really care about is I'm going to be concerned about is home health care, then we got the short-term home health care option that has a prescription drug benefit on it that when you net cost it out is probably the least expensive form of insurance in history. So, and then you throw a little caregiver on there on top of it. It's pretty cool. So there's a lot of cool things. I think all of our products, I think we could probably all play around with them in some certain way to be able to make them work to the advantage of the insurance for sure.
Sure. Thanks so much, Dimitri. I appreciate that. Did anyone else want to pop on that question before we move on to the next one?
I think go ahead, Dennis, go ahead.
Yeah, just back on the objection question, Jessica, that you had asked before. I think that we've kind of covered that as far as Natalie talked about not feeling that they're going to go to a facility or need it. Brandon talked about the family history, the price aspect. But just keep in mind that the objections really fall into two distinct categories. They're either a misunderstanding or they're a perceived drawback. Now, misunderstandings we can clarify. We teach in our training about how to take an objection, how to surface it, how to isolate it, how to address it, and then later how to overcome it. And so it's really a four-step process. But if you get a perceived drawback and someone is just hunkered down and they are just basically, nothing you can say, then the old adage is true. The person convinced against their will is of the same opinion still. You can't convince people against their will, and the best thing you can do in that situation is use the word next and just move on, because you're not gonna help people who basically, if in their mind they can't admit it can happen, that their health could change, and they affordability, that's easy. Okay, price is an easy objection, but if they're in complete denial and again have this perceived drawback, just be mindful of that. But as Dimitri indicated, there's so many strengths of these plan designs in terms of what you can do and how you can show the benefits of ownership. And again, GTL pioneered that whole concept of short-term care, home care with that prescription drug reimbursement. And I'll tell you what, it is what Tom and I like to call, when we're training, the premium justifier, because it really does get people to justify the idea of reaching into their pocket, especially when they can mitigate a great deal of that premium with those particular plans. So I just wanted to add that in about objections, because, I think Natalie said it about cost, but I like to say when I train that, if you can't afford the premium, you're fighting the $50 a month or $100 a month or $150 a month, then really you can't afford the event. So, what check is it that you want to write? Do you want to write the small check or do you want to write the big check? Because you're going to be writing a check. It's just a matter of which one.
Yeah, no, that's a great point, Dennis. And I think it segues beautifully into our next question, which is going to be, what are some common or best practices for closing a sale on short-term care insurance? So kind of like you said, if they're hard stuck on something, and for sure that there is an objection that they have that you can't overcome, don't push it. You can find another avenue or give them a.
Oh, I think we lost her again.
Yeah, know your audience and what they're looking for. So if it's not somebody interested in that particular product, maybe there's something else that'll be a better fit, right?
Right.
And did you
Yeah.
notice how Tom and Dennis, you guys didn't talk at all about the prescription drug reimbursements on a lot of these products, because we were focused on the actual benefits of these plans. And I think that's what agents sometimes get stuck in their head, is we need to push this sale across the finish line or get them to say yes because of that RX reimbursement. But there's so much more to these plans than getting reimbursed on your prescriptions. The prescription drug reimbursement is there to help afford these premiums today and to help keep the policy affordable as those rates go up over time and as they get older. But again, using the actual benefit structure of the plan and what's available to them to sell it, rather than selling off of an RX reimbursement. Now, that might be a nice little cherry on top you can use to push that sale across the finish line, but definitely best practice to sell on the benefits and use that RX reimbursement for a little bit of help towards the end, in my opinion.
Yeah.
100%.
Yeah, and just I think she's getting logged back on there, but one of the things that on the closing that I think is a good hint for agents out there, especially with the short-term care, the comprehensive short-term care plans, is you'll hear us a lot. Dennis and I do a lot of training on the sales part and closing the sale. And one of the things that I'll tell agents, if you want to have a lot of success with these plans, we use the word extended care a lot, or longevity planning, because people get a bad taste of long-term care planning, and really extended care broadens your scope, right? It brings in the GTL home healthcare only plans or the Heartland home healthcare only plans. And it also includes short-term care or even long-term care if you use extended care correctly in the sales process. But my final point on that is, when you're closing the sale, if you sell a short-term care plan, remind your clients that you sold them a short-term care plan, okay? It's the same great policy, Dimitri, that I sold you. It's the same great benefits I sold you. But don't panic when you get an email or a phone call and somebody says short-term care, because these are just called short-term care. Long-term care was taken by the federal government. These plans had to be called something. So they are short-term care, but they are very robust. Like, it's the same benefits I laid out for you. So don't panic when you see that. It's all it takes to stop it. But amazingly, you'll know as a carrier, and I know I've heard it from carriers, they get people who drop the plans because they panic and say, oh, I thought I bought a long-term care type plan and you sold me a short-term care. I don't want it. So just a little heads up tip there on the close.
Perfect. Thanks, Tom. Did Signa and Natalie get to speak on that by chance? No? All right. Do you have anything for us, Natalie?
You're muted, Nat.
My mouth was moving, but I wasn't being heard. So we've talked about so many things, and really that end closing is really bringing it home to them, right? Helping them understand. So if you haven't, throughout the sales process, you've talked about the product, you've talked about the price, you've talked about the need, put them in in that situation and say, you know, which type of care would you rather if you had your choices? You know, what type of facility would you like to see yourself in? What type of facility would you like to go in? And if you aren't going to make the choice to choose this plan, you need to have a plan set up so you know which asset you're going to sell first, right? So really put them in that reality. I mean, I know that's old school hard selling, but it's reality. You know, that's what's going to happen if they don't buy this policy and they don't have that protection, is how is that going to affect them? So, and then just wrapping up, if you haven't already in the sales process talked about this, I think this is really important. And if you haven't done it as an agent, you need to, is talk about the policy you own. Right? Set that example and help them understand that you believe it's as important for yourself as it is for them, because you own that policy as well. Here's what my nursing home and my short-term care plan or my long-term care plan look like, so that they understand you're not just there to sell them to make another commission, but that you truly believe that this is a value product.
That's a phenomenal point, Natalie. Thank you so much. And Dimitri, did you have anything you wanted to add, or did you go first?
I already talked.
Beautiful. All right, well then we can move on to the next one. We'll go into some product specific questions. So what are the key differences between the various short-term care insurance products offered by all of you? So we'll start with Natalie, since I have you up.
So the key differences between short-term, so that's
Just
really
basically
the only
like your special sauce, I
Oh,
guess,
okay,
between
yeah.
you and
So
everybody else.
I would say probably the two biggest selling points for us three. We have a ton, but we'll start with simplified underwriting. So easy to get that planned, right? The cost is affordable. It makes it a very great fit. But the two things for us that really stand out would be, number one, that separate bucket of money, right? Where the client can utilize the full 180 days or 360 days in a home receiving that care. And then when they exhaust that, then they have a full benefit of whatever they chose, 180 or 360 in a facility. We also have a home healthcare booster. So traditionally, home healthcare is reimbursed or paid at half of the cost of nursing home or facility. So we're able to make that equal with a little bit of a rider. And then that 10 days that we will pay for someone to care for in the home for a family member, an unskilled or an unlicensed person. So those are really the three things that make our product, you know, super viable and super easy for those clients to use.
Perfect. Thanks so much. Dimitri, did you have anything that you wanted to touch on for this?
You know that answer. Of course I do. Yes, everybody's laughing. We have a couple different products, as I mentioned. We have a Recover Cash product. We've been in the market with Recover Cash at least minimum 10 years that I can think of off the top of my head. It's probably more 12, 13 years if I look back in the records. But so we've got the experience of working in that marketplace, and that's a biggie, because from a claims perspective, we want to be able to make sure we pay claims. I think that's a big thing that we really do hang our hat on. From a GTL perspective, is that we try to do everything we can to make sure somebody can get benefits out of the plans that they've purchased with us. We have our CEO chairman will stand up in front of a crowd and tell anybody that'll listen, hey, we'd be more than happy to pay any claims that we're obligated to pay. That's contractually obligated. We're not trying to jump through any hoops to get out of it. We want to try to jump through hoops to get into it, type of scenario. So we definitely that's important. The newest version of our Recover Cash product, like we mentioned earlier, you got that home health care, you got the home health care component, you got the facility care component. You can kind of make adjustments there. And then if you add, so I think that makes it really nice, from that perspective. So you can make it a $50 a day nursing home benefit, and you can max it out to $1,500 a month for $1,500 a month a home health care benefit. So that could be, and ours is a 26 or 52 week benefit period from the home healthcare side. So you can really, dial it in from a premium perspective, what you need, and again, the caregiver benefit. And then on our short-term home healthcare product, both products are simplified issue, but short-term home healthcare is really, really simplified issue. I'd say this as a joke, But if somebody can fog a mirror, they can pretty much get the short-term home health care standalone product. It's all you really look at there is if somebody's currently receiving care is really what you're looking for there from an underwriting perspective. So they answered a couple questions on the short-term home health care that everybody can qualify for that product. But once they do qualify, they can get some significant amount of benefit for a small amount of dollars, at the end when you're looking at it. If you choose the smallest plan level, plan A, somebody can get up to, $54,000, under plan A. Then if they wanted to go with the plan C, which is the Cadillac plan, you could be looking at $162,000 in a 360-day benefit period. That doesn't have to be in a calendar year. It can be, it could take a year, 2 years, 3 years to eat up that benefit period of 360 days on the, from a home healthcare perspective, which is pretty cool. And another thing that we've done is that we've, over the years, we used to have a home health aid benefit that was only a 60-day benefit period. Well, we adjusted that to be a full 360-day benefit period now. So it's part of that. So it's part of the regular bucket of 360 days. So if somebody is getting home health, is getting a home health aid, that's, then they can definitely use that, for 360 days of benefit period. So that's something important to kind of pay attention to from that perspective. And then again, the caregiver benefit is pretty big from getting help from a family member and being able to get a lump sum amount of $3,500. So, it's a lot. There's a lot of little things in there, and I'm sure we all have a lot of little things in there. So I'm going to be quiet and let you guys listen to the next bunch of variations that we all have.
Thanks, Dimitri. You're awesome. So our next carrier is going to be Brandon from Heartland.
Awesome. Yeah, we've all got, our bells and whistles. So, I think with us, one of the biggest features is there is no limit on how much home health care other than the 360 days somebody can receive. So, for example, like Dimitri said, you've got your levels of coverage, A, B, and C, or basic with us. For a 65-year-old costs about $21 a month in most of our states, except South Dakota. For a 65-year-old, male or female. For the second tier option, the standard plan, $43 a month. For 360 days of home health care coverage, 120 days built in of home health aid. And then the most comprehensive benefit selection, $47.57 a month for 65-year-old. It's affordable, like you said. Very low premium, but a lot of benefit you can get out of it. And they're on that complete plan. That's paying up to $600 a day in benefit for home health care. You take that times 360 days, that's $216,000 you can get on a home health care benefit. Not to mention how much they can get out of their $150 home health aid benefit for another 120 days. So it's kind of neat seeing the differences, but also knowing what's available to your clients and understanding that. With us, you can add an additional 60 days of home health aid to your policy. For a 65-year-old, it costs about $1.82 a month, and you can add on another 60 days of home health aid, bringing you from 120 built in to 180 days, 6 months of coverage. And those are two separate buckets of money, 360 days for home health care, and then if you add that rider, 180 days of home health aid benefit. We've got that same built-in restoration that Natalie mentioned, where after your client gets better, they sufficiently recover and go a period of 180 consecutive days or 6 months of no longer needing nursing care services or home health care, your benefits reset and can pay another 360 days of home health care and let's say 180 of home health aid. So a pretty rich, feature there built into a lot of these products. Just be aware, if you're in Pennsylvania, we did actually, the state did decline that restoration of benefits for us, Heartland National in Pennsylvania. We also have an RX benefit reimbursement paying day one at $15 for generics and $30 on brand names, up to $720 a year on the standard and complete plans. So another way, again, to help your clients afford these premiums, especially since this is not a issue age rated product like hospital indemnity. This is a product where the rates go up in 5-year age bands when speaking to Heartland National and our rates. So that RX reimbursement should help them with affordability over the long haul.
Perfect. It's a great answer, Brandon. Thanks so much. And Dennis and Tom, I'll open it up to you guys. I'll ask for 2 minutes each on y'all, so that way we can open up the floor to the agents before this is over. Please, sorry.
Yeah, go ahead, Dennis.
No, go ahead, Tom.
Okay, basically, again, I'll try to make it really short. The key is all these products are great and they all have great benefits. And the biggest thing is throw the net wide and help as many people as possible. Thank goodness for those home healthcare only plans out there that have such lenient underwriting that you can literally cover just about anybody, or with True Freedom, same thing. With the short-term care plans, that's one of the things for speaking for Manhattan Life, even though we have all these products. Manhattan Life has a 2-tiered underwriting system like Wellaby does, but it's the most lenient of the true short-term care plans out there as far as underwriting goes. So with this plans, you can really throw the net wide. We've got underwriting situations where the other short-term care plans would have to decline them, and same thing with long-term care. They'd run for the hills long ago because this is so much easier than get in place than long-term care. So the biggest thing I would stress out there is we have the underwriting to throw the net wider. And again, cash is king. Even if you look, we have tons of unpaid caregivers in America. Everybody waits too long. But with unpaid caregivers, we have the flexible cash, the Fast 50. That's going to be our signature benefit with this plan as well. And we have the fact that even with paid caregivers, you know, it's home health aid first, CNA second, and then family members and friends are the next paid caregiver benefits that are paid out there with the actual claims experience for other plans. So with this plan, Fast 50, it's going to be a great opportunity for people to have peace of mind to know they can have first day cash for family members as well. And then besides that, the prescription drug, we're the only short-term care plan with the prescription drug reimbursement to help justify those premiums as well. So otherwise, I'll turn it over to Dennis.
Thanks, Tom.
Thanks, Tom. And I would just add that, you know, one of the differences that separates the Manhattan product is that there's no bill chart, so there's no height or weight. And, you know, as you start working with folks, you know, again, they're aging in either the Medicare or older than Medicare, and we know that that becomes a factor. It certainly has been a factor in long-term care as far as turning people down. The other differences, which are really similarities with all the products, is remember that, you know, things that maybe would decline a client, you know, if they were on long-term disability or Social Security disability, rather, you know, where they couldn't get coverage, you don't have those limitations. But with respect to the True Freedom, one of the differences is that there's no medical underwriting. It's just suitability. Are you currently living independently, and are you not ADL deficient? And so that is one of the things that separates that product versus even the standalone home health care products or the short-term care products. And I think I'm under my 2 minutes, Natalie, or Jesse.
Oh, you're great. Perfect. So yeah, thank you guys so much for all of your help. I will open up the floor to our agents and see, are there any questions that they want to pose to any of you all? If you do, you can raise your hand and we can unmute your mic, or we can look at what's in the chat. Not seeing anything in the chat.
I see in the Q&A.
Yeah.
Go ahead, Jess.
Perfect. So we have David saying, I'm new to the short-term world. Has anyone had experience with these plans with a person who gains Medicaid eligibility? Are they allowed to keep these plans? So can anyone speak to DSNP? Like when they become dual eligible, would they be?
Yes, I know you and I have had quite a few discussions about it. You know, not really recommending policies like these to that demographic. I think Dennis and Tom might have some good experience there, maybe even Natalie, Dimitri. In the Medicaid space, I know that does a pretty good job covering these types of services, at least from my perspective. You can get home health aid benefits from Medicaid, which you don't get from traditional Medicare. You can get good coverage from Medicaid alone to where you don't have to pay an additional premium for some of these services. Now, speaking to long-term care and actual short-term care facility-based programs, I'll let the rest of the group maybe discuss that a little.
Yeah. I don't know how deep to get on this. I kind of agree with what Brandon said. Most of the time, if you're already on Medicaid, you probably won't qualify anyway because you're getting care. So that's the no-brainer side of it. If you have a policy and you're starting to get claims, these policies are meant to try to keep you off Medicaid. So we're hoping that you'll have a plan. It's amazing the small amount of benefits you need to keep you off Medicaid, to be honest. So most of the times you're not going to have the crossover, but if you did, as long as you're hitting the claims of your policy, it would continue to pay even if you're on Medicaid. But again, because they're indemnity benefits. So I think that maybe is the simplest.
Perfect. And someone else asked, are these plans guaranteed renewable? And I believe the answer on that's going to be yes, but I'll let you guys tell me if I'm wrong.
Yeah, real quick on that,
Yes.
if I can jump in just to let you know, they are guaranteed renewable. And remember, Brandon rightfully told people the home health care only plans across the board will go up in age groups. And again, it's not a smoking gun or a bad thing. It's just the way they're built. With the short-term care plans, they are going to be age at the time of the application or the issue age. And so far, none of the short-term care plans have ever had a rate increase. And because of the way they're designed, with the design benefit in mind, I don't think you're going to see rate increases in the future, even for the large majority of these plans, if not all of them. I think my cohorts would agree with that.
What are the issue ages, Tom, on some of those products? I know with us for home health care, it's 40 and up, 40 to 85.
Yeah, that's a good question. They're actually very strong that way. One of the things that long-term care, as you know, have scaled that way back. These plans range from 40 to 89, Cigna 18 to all the way up to 89. So most of them go up to 84. I think Recover Cash is 84, and the rest of them go to 89 age-wise, and some of them go all the way down to age 18, with premiums probably level up through age 50, I would assume, with Cigna.
Perfect. I will give everybody a couple minutes to put any other questions that they have in the chat.
While they're doing that, I do want to let you know is that Jessica is going to have our full bevy of tools available. We've got an InstaPivot tool that shows underwriting for all these different products exactly by condition or med that you can find out what plans they qualify for. You don't necessarily need it. Remember how easy the underwriting is. So if you can breathe in a mirror like we talked about, you're not getting care, you're not in a facility, you can get a home health care only plan. Short-term care isn't that much further down the line, but we do now have Cigna in our tool there, so you can put in any health condition and immediately see if they qualify. So that's one of the nicest things that we have. And then we do have pivot presentations, 5 selling points tools, all these different tools that we can get to Jessica that are available for part of our extended care initiative that we have for integrity.
Perfect. Yeah, that would be great. I do love your underwriting tool that you guys have, that InstaPivot. I use that all the time because you even have like the declinable drug lists and everything.
Right.
I think it's great.
Yeah, perfect for home office, by the way. If anybody's got an agency, it's really nice for your team to have.
I couldn't agree more. Let's see. Well, I think we're running up just about on time, and I'm not seeing any other questions, so I will go ahead and cut things off here. Thanks so much for all of our attendees for joining, and thank you so much to all of our carrier partners for facilitating this. This was awesome.
You bet. Thank you so much
Thanks.
for letting us come.
Thank you.
Thanks,
Yeah.
Jess.
Thank you, Jess.
Bye.
Yeah, bye.
Thanks, everyone.
See you guys. Good to
Thanks.
see everybody
Take
again.
care.
Thanks.